What is up, ladies and gentlemen? Camilo here from Trending Waves, bringing you to our end of the market update for Monday, June the 21st of 2021. I hope you all had a great weekend and happy Father's Day to every wonderful father out there. So Friday, we put up a video that we were calling for further downside, given that that day was a pretty bearish day to say the least. And I also outlined this red trend line that you see in front of you, which I'll review in just a second. But this wave count, I looked at it again, and I love the engagement that every one of you and the comments that you all left down below on my video on Friday. So I do thank you for the feedback. And again, there's always room for growth and improvement. So this wave count here is suggesting that we still see one more push up into the primary degree wave 1. So we're still calling this entire structure here as the primary degree. Okay, and then once it's complete, a three-wave pullback into the primary degree wave 2 will be set in, but we wouldn't know this projection just yet until we top out. Okay, now before I continue, if you guys have been enjoying this content, then don't forget to hit the like button and subscribe to the channel. Also hit that bell so that you'll be notified when I upload these videos. This really helps my channel grow, and I appreciate that so far there's been good engagement and there's been good feedback from you guys. So you know, this motivates me to keep on going, and I love it. All right, because this is also essentially good educational material for me as a journal to look back at the wave structures that I've been putting out. So back to the charts. So from the cover lows, we're looking at this as wave 1, down in 2, up in 3, down in 4, and then minor degree wave 1 and 2, 3 and 4. So wave 3 came in at 1618 extension of wave 1 versus wave 2. Now this trend line here that I have in front of you guys, right, on Friday, we started noticing that when we originated the trend line from October, right, we back tested it in March, briefly came down to it, but then rallied up into the wave 3, then back tested it again back in May, right, and then we gapped down. So let's take a look at the 1 hour time frame and let's dissect this. Okay, now, oh, where'd it go? There it is. So I don't know why it's going all the way up there. Let's just go here. Okay, here we go. So before I dive into the wave structure, let's focus on this technical pattern here, right, or this technical indicator, our trend line. So we gap down, okay, and as you can see here, we're having a very hard time trying to break above it. Okay, so now, as you all know, what was once support becomes resistance, or vice versa. When it was resistance, now it becomes support. This trend line was support back in May. I showed you guys already the rest of them, but it was support for several key moments, right? And so now it's acting as resistance. Now the key takeaway here is that if we can't break above it relatively soon, or we just hover below it and then break down, then this wave structure is what I am looking at. Okay, so I'm gonna zoom out real quick and I'm gonna digest this with you guys. Sorry for the glitch of I think something wrong with trading view here. All right, so from the October lows, we go up in 1, down in 2, 1 again, down in 2, 50% retracement support, and then we go up in 3, 4, and then 5 to complete the minor degree wave 3, which again came in at the 1618 extension. All right, the way I'm looking at this, guys, I know that Friday we were calling this to be the wave 3 top already, which I think it may have been already, but we're looking at this at a larger flat correction. Okay, and what do I say that? Because if I just hide this real quick, right, let me delete this for a second, and we'll take a quick retracement tool, and we go from the high down to the low. All right, you'll know that the 1272 was never broken. Okay, and that's acting as resistance. I mean, we didn't go to test it, but we haven't broken above it, and this is still looking very complicated, to say the least, in terms of understanding the wave structure. But looking at if this is the case, right, so if this is wave A, B, and then C, then 30-minute time frame will tell us what we can expect. Okay, so since we have been, this trend line here is really not cooperating. All right, here we go. So the way I'm looking at this, guys, is that it's 5 waves down. All right, and on Friday we're calling this as wave 1, 2, 3, 3. 3 was completed, all right, and then 4. But because we went above this line here, okay, that invalidated that wave count. So now I'm looking at this again, and I'm calling the entire structure here as the wave 1. Going back in wave 2, since we can't break above it, right, then our targets here are the 50% and the 78.6. Now you'll note that the 78.6 retracement, okay, of wave 1 to get was wave 2 comes in at the 422 spot 87, which coincidentally is in confluence with a previous wave high, sorry, a previous all-time high, all right, or this area here. So we have 3 indications that the SPY is coming into a bit of resistance. Okay, we have the trend line, which again just left out of my screen, but we have the trend line, which we haven't been able to break above it. Okay, we look at our indicators here. Although there was high volume towards the end of the day, that's positive, but you see the histogram in the MACD, it's trending lower, and the RSI is trying to push higher, but even the RSI is finding resistance at these levels. Okay, so we have the 50% retracement, the 78.6, and the 422 spot 90, and the trend line acting as resistance. Now, if we can't break above it relatively soon, then I do anticipate that we are going to start rolling over into the wave 3. Okay, at which point this wave 4, or the wave C, or wave 4, or wave 5 should be completing. Okay, before we head up to the final 5th wave. Okay, which once I take you back to the daily time frame, you'll see. All right, this is still our upside target, but our target for the wave 4 should come in at the 405. Okay, another thing I wanted to show you guys was our traditional indicators here. So zooming in on the 1 hour on the daily time frame, we have the 50-day simple moving average and the 200-day. Now on Friday we broke below the 50-day. Okay, and yeah, we breaking below the 50-day isn't at all bullish. Okay, that's pretty bad for us. And so what ended up happening is that, again, today was pretty bullish and we ripped. So once again, we closed above it, but you're still noticing that here we are pinched between the trend line and the 50-day. Okay, so perhaps we're going to get a breakout relatively soon, which brings us to our next interpretation, right? Okay, so how this one differs from the one I just showed you, okay, is that primary degree wave 1 has already completed. So this entire structure here is primary degree wave 1, ABC into primary degree wave 2, and we're now in the makings of the primary degree wave 3. So this means that this is the most aggressive interpretation that I came up with, right? And it's still all valid because it meets every guideline and it meets all the fib levels. So this, I mean, given what's been happening in the markets, okay, I mean, this is not out of the question. I mean, we have a lot of bullish news out there, okay, and excuse me, and so yeah, I think that if this plays out, I mean, we can continue higher. So let's review this wave count. So we go intermediate degree wave 1 down in 2, which not much changed. What changes where we are labeling the higher degrees. Okay, so we're on our main interpretation. If I go back to the daily time frame just to compare apples to apples, right, this was the intermediate wave degree. Here we're calling this as a primary degree. So this structure is complete, this structure is still ongoing, so wave 1 is still ongoing, and that old interpretation. Now this one here, okay, we're looking for wave 1 down in 2 and wave 3. So taking you down to the 30-minute time frame to dissect this further. Okay, so from the intermediate wave degree 2, we go up in 1, ABC down in 2, 50% retracement support, 3, 4 to the 23%, and then final 5th wave to complete the minor degree wave 1. We then go ABC to the minor degree wave 2, which came in just shy of the 38.2% retracement. Now, the way we're looking at this interpretation here is that this ending diagonal completed in the wave 1, we're now completed the wave 2, okay, which came in at the 50% retracement of wave 1. Okay, spot on 50% retracement, as you can see there. And now we're having, this hard time here trying to break above the trend line as we suggested. But again, if we end up breaking above it and continue on higher, then this is the wave count. Okay, and I will not hesitate on bringing out new a trade, and we're gonna see new highs in the market soon. So just like in the previous interpretation, right, or wave structure, this is one level to watch, which is the 422 spot 95, and obviously the previous all-time high. But not until we can break above this trend line, again, break above the trend line and then reach these levels, then I can safely start saying that this is the count. All right, until then we are going to operate under the impression that we may see further lows before we set in our last leg into the primary degree wave 1. Okay, if you guys have any questions, just shoot me a comment down below. Now taking over to the Qs have been a little bit easier to dissect. Okay, the Qs, again, we're still looking for the primary degree of 1. If we're pairing this up to our main interpretation out of the SPY, we're still looking for one more leg up, which the Qs is in the making, right? So you notice that today the Qs were a bit lagging. They were just up 0.5%. All right, now taking you to the 30-minute time frame, you'll note that we're still here, right? So from the May lows, up in 1, down in 2. Actually, let me turn off these indicators. All right, 1, 2, 3 to 1618, 4 at the 38.2, 5, which came in just shy of the 100% extension, and now we're looking at A, B, which I noted on Friday, we did not break above the 1272. So now what that opens the door to is for the downside. Okay, now key levels to watch for support is 342 to hold and 341 to continue holding, just in case this one does not. All right, but our targets for the wave 2 should come in the minor degree wave 2 fib levels, which is the 23.6 or the 38.2 at the very least. So this is A, up in B, A, B, or 1, 2, down in 3, 4, and then 5. Okay, so you know, this is still looking a little bit dicey, but we're getting there. So let me see something. Yeah, again, so this, see, like in the SPY, right, the trend line that we originated from October, or in this case September. Okay, we back tested it, but we have not tested it again here. So this is why I'm a little bit under the impression that we can see further downside. Okay, until we test it, or you know, just very shallow wave 2, and then we head on higher. All right, guys, so that's it for today. I think we're getting a little bit of more clarity in the markets, and so yeah, just be patient and keep it one day at a time. All right, guys, so as always, I do appreciate you all. Subscribe to the channel, hit the thumbs up button and the bell notification so you'll be notified when I upload these videos. As always, thank you so much and stay safe out there, and I shall see you guys tomorrow. Take care. Bye bye.